good morning, wherever you're joining us from, and at whatever point in time you're watching this video. So last week, we have started our beginner Forex class, and we had gone through an overview of the entire course. And now we are going to go into the core content of the entirety of the program, okay? Starting out with week 1, lesson 1. So please, without further ado, join me as we start the first topic and the first lesson for the week. So, of course, by now you should have your course outline. If you do not have your course outline for this course, kindly refer back to the previous video, okay? But by now, you should have your course outline. And if you check your course outline quite easily, you would find the first topic for the course being what is Forex. So, if I want to put it simply, I would say Forex is the global financial markets that allows people to trade one currency pair against the other. Okay? Basically, a market that allows you to trade currencies. If you think about the fact that one currency is stronger than the other currency, and then in that currency pair, you buy, and it turns out that, okay, you're correct at the end of the day, you make profit. If you think along the same line, and it turns out that you're not correct, you lose. Okay? That's basically how it is. It's basically you predicting price. It's basically you giving, based on your own perspective or your own trading system or your belief, some sort, whichever system you use, whichever way you arrive at that final conclusion, that based on what you see in a particular chart, like you're looking, this is the USD card Forex pair, you're looking at this and then you're seeing, okay, today was actually a very funny day. I set up my entry, price came very close, but didn't pick it in, and then went ahead to hit my take profit and created a long spike. But that's aside though. So if you think or you feel that price is going to go up based on what you're seeing, based on your belief, based on whatever it is that you use to trade, and you predict or you feel like price is going to go up and you buy, if price goes up, then you make profit. Sounds simple, but it's not that easy though. If you still think based on your belief or perspective of the market that the price is going to go down and then you sell and it ends up going up like you do today, you either lose the amount that you risk in a trade if you have good risk management, or you lose your entire account, depending on how much you staked on that trade. Okay? Just think about Forex like the electronical way of exchanging currency pairs. That's basically what Forex. I started saying by Forex is the global financial markets. Okay? Where we buy I'm going to try to be as fast as I can. The global financial market where we buy and sell currency pairs. That's the first thing you have to know about Forex trading. It's more electronical. In those days, it used to be physical. You would have to go to a currency exchange company or whatsoever they were using then. But now it's more electronical. You don't have to go to a particular broker or call. In those days, they used to call, and then they would use paper. When I mean those days, I mean in the 90s and in the early 2000s. They didn't have as much computers as we did. And then the market for retail traders was almost non-existent because you needed a particular amount of equity. You needed a particular level of cash, to be able to enter into the market and then buy and trade. But now you have what we call leverage, basically the currency brokers borrowing you money to trade, in addition to the capital that you've invested. But you just have to know the basics. Forex trading, Forex is basically the global financial market, right? And Forex trading is basically the exchange of one currency pair to another. So for me, today I believed that based on my strategy, that the US dollar was stronger than the USD card. So I bought the USD card currency pair. Okay, I basically traded a single buy. At most, I take like 2 trades in a day, right? Based on what, if you've watched some of my videos, you would notice that oftentimes it's just maybe one position marked out on my charts. Today, I actually took a trade. I entered the limit order. I only trade with limit orders, where you just set the parameters, and then when the price moves to your direction, I'll teach you how to set limit orders if you do not know in the course of this program, in course of the course when we are dealing with managing your or using your MetaTrader 5 and trading view. So I set a trade today. It didn't get to my limit order, but it went in my direction. I predicted it was going to go up based on my strategy. Ended up going upwards, and then it didn't pick me in. That's fine. It happens some days like that. So basically, Forex trading is the exchange of one currency pair against the other. So let's elaborate a bit more on this, right? So the foreign exchange market, which is basically what Forex is abbreviated to be. The foreign exchange market, known as Forex or FX, is the largest financial market in the world. It's a global decentralized market. This is theory, but it's important that you know it, right? It's a global decentralized market. There's no control. There's no central control over the market that fixes the price of the currency pairs. There are just various factors that affect the price of any currency pair. There are various factors. The economic index of the country, the economic strength or otherwise of the country would determine how strong the currency pair is. Okay, for example, if the US economy is performing really well as against other currencies, as against other countries like Canada, the USD card currency pair is going to go up, and I'm going to explain what pairs are to you later. The USD card currency pair is going to go up, right? If you feel like the USD or the US economy is going to struggle, then as against the Canadian economy, then you obviously sell the USD card, because based on your perception, Forex is about perception and perspective. Based on your perspective, be it maybe an economic strategy or indicator, be it maybe a normal trading indicator, you think and you see that the country's economy is struggling, then you basically short. As in the case of the example I just gave earlier, the US dollar versus the Canadian dollar. You'd basically short, right? It is the largest market in the world. The New York Stock Exchange trades about $220 billion a day. Forex trades more than that. Forex trades in trillions. What that means is, forget the figures. What it means is you can make a lot of money in the market, and you can also burn your hands in the market, because there's a lot of money moving in and moving out of the market at every point in time. So to a large extent, all it boils down to is good risk management, which we will talk about much later in the course, right? So that's basically what it is. That's basically all you need to know about the first topic, which is what is Forex. Forex trading is basically the exchange of one currency pair for another. If you feel one currency pair is going to go up as opposed to the other, then you buy. Okay? If you feel the currency pair is going to go down as opposed to the other, then you sell. Okay? Now, it's important for you to note certain things, which obviously still falls under this topic, but would be elaborated more in the future, right? The Forex market is open 24/5. I'll explain what that means. That means it's open 5 days a week, only closing during the weekends. Okay? It's open 5 days a week, only closing during the weekend. So you trade Monday, although there are different sessions, which I would come to at some point to discuss the Forex sessions with you. But there are different sessions of Forex markets. But what you have to know is that it's open from Monday to Friday midnight. Right? It opens from Monday to Friday midnight. And one of the things that you have to understand also is the fact that in those 5 days, on every single day, there are different sessions. Some sessions overlap, right? Some sessions overlap. Let me just give you a list of the various sessions that we have. We have the London session. We'll go into this in details later. We have the New York session. And we have the Asian session. And I'll leave the last one for you to guess. Okay? Guess the last one in the comment section for me. Just tell me about the last session in the comment section. It's a little work for you to do for yourself. You also have to put in a bit of research if you would actually want to make it as a Forex trader. Okay? So that's one thing you have to know as well. There are different sessions in the market, and these sessions have currency pairs that move better during the sessions that the economies of those currency pairs are active, right? So you would expect, let's say, London session is usually from 8 a.m. to 4 p.m., okay, UTC. You would expect the London, the euro dollar, the euro dollar currency pair, and then the Great British pound US dollar currency pair to move better during the London and the New York session, because that's when the economy of those countries are active, right? So this first part falls under what we call definition of terms. Okay, so moving on to the next section, still under the same topic, we are going to be looking at what is traded in Forex. That's the next subheading under this topic still. So what do we trade in Forex? You're not buying anything physical, unlike a market or a store, an actual brick and mortar store that you walk into. In the Forex market, you're not buying anything physical. So you're basically buying money. You're trading the electronic representation of currencies. Simply put, money. Think of yourself as you digitally owning a currency, a share in a country's economy, right? Just think of yourself as that. For the time being, maybe your trade lasts for 10 minutes or 1 hour or 1 day, whatever, how long it takes your trade to last, depending on the type of trader that you are. Just think of it in that way, that you are basically owning a share. It's that serious, yeah? It sounds as though I'm trying to make it more serious than it actually is. But when you start trading and start putting actual money on the line, you would find out that it's actually quite serious, okay? Just think of yourself as owning a particular some number of shares in a country's economy, right? And also note this here, the price of the currency is usually a direct reflection of the market opinion on the health or otherwise of a country's economy, right? Let me say this. Let me type this here so you get it. The price of a currency pair is a direct reflection of the market's opinion of a country's economy. So this is why you see some people say things like fundamental analysis, trying to get to find out, okay, how strong is a country's economy? How weak is a country's economy? What is happening? This is why you see things like people talking about elections, right? And how it affects My health is not spelled correctly. Elections and how it affects the currency markets, the cryptocurrency market. So all of the politics, the government policies, all of those things tends to affect the currency pair and the way the currency pair moves, right? If it's moving upwards, depending on which currency is the quote and the base currency, it basically is an indicator that the economy of that country responsible for that currency pair or that owns or primarily uses that currency pair is healthy or otherwise. That is basically what it represents. So it's basically a reflection of the condition of that country's currency, of that country's economy, as opposed to the other country, right? So Forex is traded in pairs, and that's another thing you have to also understand. An example is my favorite currency pair. You're not supposed to get attached to any currency pair, but seemingly for the last 1 year or so, have been largely attached to the USD card. Forex is traded in pairs. So basically what you have here on my chart is the USD card. So this, what is happening here, the movement of these candlesticks is basically a reflection of the economic condition of the two countries. So in this case, you have the USD card first, the US dollar first, and then the Canadian dollar second. So this is more of a representation of a tussle somewhat between the two economies. And so to a large extent, this represents the US economy because they are the first currency here before the USD card. So if you have a situation where the US economy is outperforming the Canadian economy, you're going to have what we have where the market is going in an uptrend because this currency pair, which is the first one, is basically stronger than the other one, which is the Canadian dollar, right? So you're going to have what we have where the market is going upwards. But if the Canadian economy is outperforming the US economy by whatever index or is more healthy and more competitive than the US economy, then you're going to have what we've had recently after the election, where the economy was a bit unstable and it was trending downwards for some weeks and moving sideways. Sometimes the market can also move sideways. Okay, so you have uptrends and you have downtrends. I will discuss how to technically and fundamentally spot these uptrends and downtrends much later. Okay, so next up we're going to be looking at is, we've discussed what we trade. So basically, let me write it down. We trade money in form of what? In form of currencies. We're going to be looking at what currencies we're talking about. Of course, we're talking about different types of currencies here, but one of the major things you have to note is that there are major currencies in the Forex market. I'm not talking about major currency pairs now. I'm strictly speaking about currencies by way of normal currencies standing alone, okay? There are major currency is in the market. So there are basically several types of things that we trade, but I'll come to that when we discuss about major currency pairs, minor currency pairs, exotic currency pairs, and all of that. But what we are strictly looking at here is major currencies in the market. So we have the USD. Of course, you know the US dollar. We have the euro. Okay, we have the Japanese yen. That's the JPY. We have the Great British Pound, GBP, and we have the CHF, Swiss franc. We have the Canadian dollar. We also have the Australian dollar, and we have the New Zealand dollar. That's NZD. Okay, so basically the countries: USD, United States; Euro, the whole of Europe; JPY, Japan; Great British Pound, Great Britain; CHF, Switzerland; CAD, that's Canadian dollar, Canada; Australian dollar, Australia; and we have New Zealand dollar for New Zealand. These are the major currencies, not major currency pairs now. I mean major currencies. Okay, let me make this bold so you know that it is a subhead. Okay, so these are the major currencies, right? One thing you have to understand is that there are also other currencies that are pretty important, but these are the ones that are recognized as major currencies. So now the next subheading we are going to be discussing still under this topic is buying and selling currency pairs. And selling currency pairs. Okay, so I already mentioned what we do in Forex markets. We basically trade money in form of currency pairs. Now, it's important for us to start with this. Forex trading is basically simultaneously buying one currency and selling the other. We trade Forex in pairs, in currency pairs, right? So Forex trading is basically buying one currency pair and selling the other. We do not trade them as a standalone. We trade them as a unit, two currencies against the other. So we're basically sort of saying we're selling this currency pair because we believe that the first currency's market is weak and the other currency is strong. So in the case of USD card now, if we are buying USD card, it means we are buying the US dollar and selling the Canadian dollar simultaneously. That's basically what we are doing. So just imagine for each pair being in a tug of war with the other. So just imagine each pair being in some sort of a tug of war with the other. So obviously, the stronger economy, right, the better performing economy, the currency of the better performing economy would tend to win and push the currency pair upward or downward depending on where it is placed in the market. So if you have something like the USD card here now, and you're buying the USD card, you're buying the US dollar, and you're selling the Canadian dollars. That's what you're basically saying is that based on your strategy or whatever economic indicator you're using, you believe that the US dollar is stronger than the Canadian dollar. So you are buying the US dollar and you're selling the Canadian dollar. That's basically what you're doing simultaneously by just clicking your buy button on the USD card and vice versa, right? So there are three categories of currency pairs. This is not major currencies now. We've talked about major currencies. There are three categories of currency pair. The first one is majors. Okay, we have the major currencies. We have the major currency pairs, and we'll come to that shortly. Let's go. The second one, number two, is minor currencies. And the third one, what we call exotic currencies. Exotic currency pairs. So I will give you the first two, which I believe are quite important, right? And then you would research on the exotic currency pairs and drop it in the comment section. Any exotic currency pair you can find, there are a plethora of them. There are so many. I will explain what they mean for you, and then I'll give you that. So the currency pairs listed as majors earlier, right? Those are major currencies. Now, if you cross them, if you cross the US dollar, look at where I listed the US dollar. I listed it first because it's more or less the global currency, right? Whether we choose to admit it or not, in spite of what BRICS is trying to do at the moment, they cannot undermine the value of the dollar. Over 40% of international trade is done in the US dollar. 40% of global international trade. More than that, actually. For the US, the major currency pairs is basically the US dollar crossing any of the other 7. The US dollar crossing any of these other 7. So let me give you an example. You have the Euro USD. This is a major currency pair. You have the USD CAD. This is another major currency pair, right? You have the USD JPY. This is another major currency pair. You have the Great British Pound US dollar. Another currency pair, you have the USD CHF. Another major currency pair, if you watch, they are all here. They are all here, right? So USD CHF, another currency pair. AUD USD, another major currency pair. And we have the NZD USD, another major currency pair. So they are like 1, 2, 3, 4, 5, 6, 7. So you have 7 major currency pairs, right? The reason why they are called major currency pairs is because they are the most liquid. If you look at all of the currency pairs I just listed here now, you would discover that first world countries, that's one, more stable economies, secondly, more money flows through them. So they are the most liquid, they are the most actively traded in the international market space. For international trade, so long as Great Britain is concerned, you can't overlook the GBP. Of course, I already stated the importance and dominance of the US dollar. The whole of Europe uses the euro. Switzerland, CHF, one of the major money bags in the world. You have Australia, and then you have New Zealand, and then you have Canada as well. All right. So these are like the most frequently traded. They are the most, I'm giving you the reasons why they are known as major currency pairs now. They are the most frequently traded, right? So you have a situation where the currency, they have more volume in the market. They have more trades placed on them because they have more money flowing through them. And they have more money flowing through them, like flowing through the currency pairs. They move more, giving you more opportunities. And because they have more money flowing through them, people tend to place more trades on them, right? So it's basically simple. Those are the major currency pairs. And if you are a starter, that's where I'd advise you start from. I usually would prefer people picking 1 or 2 currency pairs and just focus on that currency pair until you learn and you know how to, you understand the movement of the currency pair. You master its movement. You become used to how it moves, because every currency pair has its distinct characteristics, what makes it unique in the way it moves. There are currency pairs that have a lot of, weeks, not necessarily because of liquidity, lack of liquidity or whatever, but they just tend to create a lot of random market movements. Even in that random, in all of that randomness, there's a certain level of pattern that you can get from it. I like the USD CAD because it is much more stable and one direction in a particular period of time. When it changes direction, it's easy for you to spot based on how I trade. When it's consolidating, it's easy for you to also clearly see it. You get? So that's for the major currency pairs. So now the minor currency pairs, right? We're looking at the minor currency pairs. These currency pairs include any of the 2 major currency pairs, right? They include any of the 2. without the US dollar. So you can cross any of the two major currency pairs without the US dollar. They are also very, 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 very important in the market, right? And then they are also well traded, although they are not as frequently traded as the majors. So you have the Euro JPY, you get it now. You have the GBP, JPY, okay? You have the Euro NZD. So just a cross of any of these 1, 2, 3, 4, 5, 6, 7, a cross of any of these 7 without this guy here is a minor currency pair, right? And like I said, I'll leave you to figure out the exotic currency pairs and drop the exotic currency pairs in the comment section. Any exotic currency pairs you can find, right? But I would just give you a simple definition. An exotic currency pair is, so you know what you're looking for those who do not have an idea about it. An exotic currency pair is a currency from countries with developing or emerging markets, right? Currencies from countries with developing or emerging markets. That's what those are exotic currency pairs. So now you go do the homework for yourself and then you find out examples, okay? So basically, there are 2 other important topics or subheadings that I would want to discuss, but I do not think they are really essential to your success as a Forex trader. First off, is not like they're not important. I don't think they are essential. They may be important, but they are not necessary, okay? Which is why I would not bore you all of the stress of discussing them. But however, the notes I'm going to send on my Forex group, I obviously, after every topic, will send a note. So the notes I'm going to send on my Forex group would contain the 2 topics that the 2 subheadings that I'm just going to write out now. The first of which is the size of the Forex market. So in that note, I will be discussing about the size of the Forex market. And then also, I would be discussing about how to trade Forex. Okay? Not like step-by-step, not step-by-step instructions on how to trade Forex. No. We're basically discussing the various market participants, right? Retail traders, retail trading, sports trading, futures, options, and etc. Okay, so we'll basically be discussing the definition and the significance of all of this. But it's important for you to note this, that this is basically what we are doing. We are basically retail traders, right? So these are the other 2 things that I'm going to be discussing, not in this video, but in the notes that I'm going to send on the Academy WhatsApp channel. Now, if you'd like to belong to the Academy WhatsApp channel, just click on the channel description of this YouTube channel. You would find the link there. Click on it and you'd find yourself on the Academy WhatsApp channel. It's completely free. You're not being charged anything. It's a completely free course, okay? So thank you very much for watching this video. Please stay tuned. In a couple of hours or days, depending, the next video of the next topic is going to be dropping. Now, if you do not understand what we are doing, kindly watch the first video in this playlist. It gives you the first 2 videos in this playlist. It gives you an overview of the entire course, right? And it helps you to, understand where we are in the grand scheme of things. So thank you very much for watching. I'll see you in the next video. Until then, stay safe and have a good one.